Good evening, this is Ken Long from Tortoise Capital Management, August 25th, 2009 for Berlin. I want to do a thought experiment and some practice framing on the triple screen system and a variation of it for tomorrow's trade. What I've selected on this set of 8 charts were a slightly relaxed criteria on the triple screen. In every case, the ADX is greater than 25. But I only asked for those that then closed below the 20-day moving average. I did not also require them to have closed below minus 80 on the Williams percent R. If I add that third criterion, close below Williams percent R, then there's only 2 that are on this list, Alcoa and Blackstone, that meet the criteria. And by going with just the simpler criteria, you can see there are actually a number of very good setups that emerge by relaxing those criteria a little more. So in general, what you can see with this idea, a strong trend of ADX greater than 25 is always going to give you this kind of formation like you see in Alcoa, especially in Goodyear, GPI, Harley, Energizer, especially strong. I mean, boy, it doesn't get much more efficient than that. And then the pullback below the 20-period moving average is always going to give you the investable edge that looks like this. So you can see the pullback from the high. You now can see that there's a possibility of framing a 2-to-1, a 2-to-1 with a simple retest of the high. This one you can frame, and that's going to be very tight stop because it lacks volatility. Also in ENR, you can see it can test up here, and you can get a very tight stop all the way across the board. That's going to be the phenomenon. So the presence of the very strong trend is what creates the psychological commitment in people who already own it to be willing to buy it on a dip and maybe add to the position. The fact that we can frame the trade and see 2-to-1 gives us some risk management and some discipline to our approach of trend following and buying on dips in a bull market. So now I want to take a look at 4 of these a little more closely. This is Harley. You can see that it did not close below 80 on or minus 80 on the Williams percent R. The relaxed criteria actually gives us a chance to trade this, and there's an argument to be made why that's a good thing. So we've got Williams percent R is here. We can see the ADX 14 is greater than 25 and plus DI greater than minus DI. Because it had an up day, we're seeing like 1 day's worth of momentum already. And so yesterday this would have actually been a triple screen. We could conceivably already have been in that position from yesterday. But seeing 1 day's worth of momentum allows us to put a trade frame in that looks like this. And if we're willing to believe in the possibility of another day's worth of momentum. The market has been sideways for 2 days, and so but has shown no sign of panic selling. So in a bull market, on a sideways day when Harley can outperform the market, that's got some positive indications. And if it breaks through that 2250, that'll be seen as a resumption of its bull move. And you can see above that we've got a 2-to-1. Easily identified. So that looks like a reasonable setup. That's a reason why you might be willing to relax that criteria, because if I have that criteria that it must close below minus 80, I would never see that chart. And so this is J.C. Penney's on the day that we're framing it. This is another one that we relaxed the criteria, and so we get to see this chart. ADX, Williams percent R, the stop, enter, retest at the previous swing high. You can see we've got a 2-to-1 frame in there. If you were willing to have a little bit longer or wider stop and a longer time frame, you could maybe go all the way over to 30 and now have almost a $1.75 stop. And you can see from ATR that would be 1.5 ATRs. You can't see the 2-to-1, but it gives you a little more flexibility, smaller position size. My personal preference would be up in here so that I could see my 2-to-1. Blackstone Group, this is one where the criteria was actually met. Now you can see instead of being an up day, we've got a second down day up in here. So there's ADX, and that Williams percent R you can now see meets that criteria. Now if we've got our, this looks like a reasonable stop in here, and you can see there's actually been, 4 times, 5 times, let's see, 1, 2, 3, 4, 5, 6 times it's held in that vicinity of 1280. And so there's some reason to believe that that's an important price level. Now, even if it dips below that tomorrow and then reverses and starts going up with market strength, I'd still be a buyer of it, simply because, let's see if we even get a retest out to 15. That looks really powerful. If it hesitated at 14, I'd probably be willing to cash that, because I could have, that would give me almost 1.5 hours. So if I was able to buy it around here, hesitated at 14 like it did yesterday and reversed, that double failure there would tell me the time to get out of it. And then finally, my all-time favorite trading stock lately, Alcoa. I like it. On -80, ADX is strong. You can see the support level at 12.25 has been powerful. It's holding right at the 20-day moving average. You can get a nice tight entry there. Retest to 1375 is not unrealistic. There's almost 3-to-1 in that trade, and it has very small spreads and tons of volume. And because it's so strongly correlated with the material sector, if we see strength in SPY and strength in the commodities, that's going to be good. And Alcoa, as we've seen in the Dow Tactical Report, is the only Dow component that is dramatically oversold. So there's a possibility here for Alcoa to play catch up with the rest of the market once the basic materials get moving. So I really like that setup for tomorrow. So that's a quick look at the basic ideas behind the triple screen. You're looking for strong trending stock that has made a measured pullback, and you're able to see a 2-to-1 trade on a retest of the previous swing high and the possibility of more, so that if it goes through that, you'll have a very substantial trade. So thanks for your attention.